Let's talk about 8 potential catalysts for Chinese stocks, NIO in particular, which are actually not related to the company. And yes, it was an interesting week in the stock markets in my views, seeing some signs of possibly a turnaround. But if you look at those topics now, the US debt ceiling, the inflation, Fed monetary policy, Evergrande, US-China trade, delisting threats, China's regulations and US-China relations are what I see are new indicators of what could possibly be a catalyst to stocks like NIO and Chinese stocks in general. So let's dive into that. First of all, this video should serve as a quick run through to kind of give you an update on where is my current thinking about the situation of Chinese stocks in the stock market and the next couple of months and what to watch. I will be going deeper into possibly each of these topics, and I have actually been some background research in terms of speaking with persons that I can invite onto the channel in order to hopefully give you a better understanding and background. But as always, take this just as an opinion piece. These are just my views. Go out there, find different opinions. My opinion will most likely not align with what you may find out there in the media. And so I think this is also part of investing actually, that you try to anticipate new trends or what could possibly happen, but there is no guarantee that things will be happening the way. And so these are the bets that I'm placing, and so let's dive into these topics. First of all, you must have noticed that during this week, NIO has kind of bottomed, and particularly yesterday we saw a huge green candle, and today it's also doing quite well. And interestingly, this jump came actually with the news that in the US they found a solution to the debt ceiling, just temporary, postponing it into December and thereby lifting the fear that by October 18th the US will not be longer able to fund the government. So what has this got to do with Chinese stocks, you would ask? Well, it seems like that investors have been pretty cautious around this issue when it came up, and then they took some chips off the table. And where would you do that? Particularly in risky stocks. And Chinese stocks are quite risky currently in this whole fear, uncertainty and doubt environment around what's going to happen with China and the US. And also, usually they have a pretty high beta. For example, also lots of stocks that ARK Invest is actually investing in. Sometimes companies who are growing fast, that don't have earnings yet, are not profitable yet, maybe even startups. So these stocks are very volatile and they will fall a lot in terms of that the economy is not doing well, or if there's uncertainty, if there's fear in the market. And so it makes a lot of sense to take and sell off some of these companies in case that there is bigger issues evolving. And now the opposite has happened yesterday. For instance, with NIO, I would say lots of investors are now bringing their chips back onto the table into those more perceived risky assets. And so this example around the debt ceiling should give you an idea of what could happen to stocks like NIO in case these next catalysts that I'm now talking through will actually materialize in the next couple of months. So of course, the next big topic is inflation. This is depressing the multiples or compressing them of particularly the growth stocks, but it could turn out that inflation is only transitory. So right now we have the news, for instance, here in Germany, 4% inflation. But the question is, where is the inflation coming from? Is it coming from the demand side, that there is too much demand and consumers are willing to buy goods, but there is just no supply for it? Or how much is actually coming from the fact that there are supply shortages, like on the logistics side? Of course, this is the big topic currently in the markets. It's impacting many of the next topics that I'm now talking about. But there is a chance that inflation is in fact transitory in the end and will come down to normal levels again, or even that deflationary effects, for instance, cheaper prices for goods because of technology, enabled by AI, enabled by declining cost curves in batteries and so on, will actually benefit the consumer. And so if this turns out to be the case, I would expect that there would be a huge effect on growth and technology stocks in general, but also Chinese stocks in particular. And also the fear around the inflation that we are having right now is actually creating some interesting effects on the US to China relations side that I will talk about in a couple of minutes. First, let's move to the next point, which is around tapering and interest rates. So that would be the response of the Fed, their monetary policy. They could start to lowering their asset purchases. And another tool that the Fed has to fight inflation is to raise interest rates. And this is something where the markets are really worried about currently because some would argue that the inflated asset prices are coming mainly from this expensive monetary policy and quantitative easing. But this fear may actually be a little bit overblown and priced into the stocks a little bit too much in the end. Why would the Fed not raise interest rates too much is that the effects on the economy would be really bad. Now, many businesses have taken out loans in order to survive the corona pandemic, and also the consumer has taken out loans and so on. If now suddenly the interest rates are going up by a lot in order to fight inflation, that would have really bad effects on housing market, on the consumer health and confidence and so on. And so I think the Fed really doesn't want to do that, and so it's kind of stuck there in this way of dealing with the inflation at this point, which ultimately could actually be to the benefit of the US-China relations. So now with this entire situation of inflation being a problem, what could the US actually do in order to solve it? And one way would be to bring down tariffs. And this would actually benefit both the Chinese side as well as the US side. For the US side, it would make goods cheaper, so thereby directly impacting inflation. For China, which is a big net exporter, it would mean that they could export more goods again. And on this entire US-China trade war, I think that would take out lots of pressure. And we now see that actually the US officials are actually walking towards this direction, saying explicitly that they are thinking of making certain goods and products exempt from tariffs. And so that means this bad factor of inflation is actually having a positive impact on US-China relations, I would say, and ultimately could be a win-win situation. Now let's talk about another elephant in the room, which could have a plot twist with it, which is Evergrande. Of course, lots of fear around this topic, and I've covered it here on the channel, basically outlining my views that hopefully this issue can be resolved by splitting the company up in different parts, and thereby hopefully being able to resolve the debt issues without causing a crash on the housing market. What interestingly this could have as a result is historically this is where Chinese have been investing in the housing market. That was one of the most important asset classes. Lots of Chinese are owning their houses, and they have made quite some money actually with buying their houses over time. Now, this could kind of change now in their views, but not only in their views, but also in the government's views. And this could actually emphasize the importance of new asset classes, which could be the stock markets. So nowadays, not many Chinese are investing in the stock markets. So far, of course, only in mainland China. Few of them know how to actually convert some of the currency into US dollars in order to be able to also buy overseas listed stocks. But we see a couple of insights and trends how this might be changing. Now, not only is Shanghai and Shenzhen and now new Beijing going to be more important in terms of the exchanges and also bringing technology companies there and also improving the regulations, but they are still in a kind of in a childhood, if you will. But additionally, of course, we see now the increased importance of secondary listings in Hong Kong, and we see the first pilot projects actually of non-mainland Chinese being able to invest in those mainland companies. So far, that's impossible. Currently, only mainland Chinese are able and allowed to invest in Chinese companies at the Chinese exchanges. But there are now pilot projects being started that actually foreigners can invest directly onto the mainland. And so far, of course, mainland Chinese companies had to list in the US in order to be able to raise cash from overseas investors, but that may actually change over time, and it could actually bring some bargaining or negotiation leverage for the Chinese side onto the table of the US-China trade war and negotiations and the relations in general. Because of course, next topic, the Holding Foreign Companies Accountable Act, which is the framework for delisting Chinese stocks that has been put into place, is still a threat for the Chinese US listed companies, right? But we see also that now the SEC and the Chinese regulators are starting, or the equivalent of the SEC in China, are starting to negotiate, hopefully finding terms. They are now also saying, like, they are acknowledging the VIE structure as a necessity for Chinese companies to go overseas and raise capital. But of course, we also had all of this negative news around the threats of Chinese companies being delisted, as well as new Chinese companies having it harder times actually to get listed in the US, because the bad boy Didi went ahead and did not ask for the permission, or actually they did not listen to the warnings of the regulators that they should not go ahead with the IPO, and they still did it. And so this whole messed up situation could now actually flip into something positive in my views, with the background of what I just mentioned around a new asset class being necessary in China, also from even a government's perspective, and then having those US-China trade as well as delisting negotiations going on. I think what is on the table here is that China will possibly allow Chinese mainland citizen to maybe invest a budget of around $50,000 overseas. And that would be to the benefit to Wall Street. That would be to the benefit of the Chinese citizen, because they can actually then also invest into the companies which they know but are currently not available for them to buy, such as NIO, such as Alibaba, and other companies, of course. And so this would actually come quite handy into those negotiations, should be a win-win situation, and hopefully appease both sides so that they can find a compromise and not letting those companies get delisted at the US exchanges. Now, I've made a couple of videos around the topic of the delisting threat. What I can summarize it always is, if you own stock in Chinese companies that are listed in the US, in case they get delisted, that doesn't mean that you lose the ownership. That only means that the companies are not longer traded or exchanged on some of those US exchanges. So they can trade over the counter, just like Tencent. They can start being traded on other exchanges, such as Hong Kong, and possibly in the future even on the mainland, as I just pointed out. And Wall Street and the US are surely taking notice of that. And so, of course, they don't want those trillions to be traded somewhere else, although that might still happen if things are escalating. But I think it still is more likely that they actually come to terms that those companies can actually be listed still in the US. But obviously, they will seek further listing closer to home in the secondary listings on Hong Kong, and in the future actually also on the mainland markets. And what I am observing is that this discussion is becoming more friendly, with the example of the CFO of Huawei, Ms. Meng, who is now actually back to China. Also, China has released 2 Canadian spies as a sign. And also, I think the Biden administration is kind of warming up now recently. There was communications between Biden as well as Xi Jinping, and they seem to agree that they want to adhere to the Taiwan Treaty. So that was one point which they spoke about. But also in general, it seems like the US stance is now to strengthen their national side, like what's going to happen in America. But still seeing China as a competitor, but importantly with the views that this shouldn't escalate in some sort of confrontation. Another issue is, of course, the Chinese crackdown and regulations, which is one of the major reasons for the sell-off. Investors are still trying to wrap their heads around the consequences of that and whether or not China can still be a trusted place to invest in. But I'm now seeing a shift in sentiment, with the first voices getting more public here, and actually mention also the benefits and the good sides of this crackdown. And that could be a really big catalyst in the end if investors are waking up and liking the thought that many of the regulations that are put into place could actually become a catalyst and a growth driver.
Chinese economic regulators, they will say, yeah, we get it that the billionaire class is unhappy. We understand that because of what's been happening with Ant and what's happening with Tencent, what's happening with Didi, what's happening with the major tech platforms. But for every dozen billionaires, we have 10 dozen multi-millionaires who want to become billionaires. And they're out there trying hard, working hard, investing, earning, innovating, and doing all sorts of new things. And so the thesis I get back from the regulators when I put to them this thesis that you are actually having an impact on the business sentiment index of the largest firms is, yep, we get that, but there's a whole new tranche of firms emerging in these sectors where confidence is reigning supreme. How do you produce that as a mathematical model? There is none.
So I think this is a heavyweight opinion by the former Australian Prime Minister here, which, by the way, is fluent in Chinese, so he knows what he's talking about. And this pays actually into the thesis that some of these smaller, more hidden champions now can emerge as some of the most successful companies. That's why I'm investing in Sap Health. That's why I'm investing in Xunlei, in Xnet. These can now get out of the shadow of Tencent and Alibaba and hopefully shine and develop further. And I'm not alone with this opinion. Actually, the general partner of China Accelerator, which is a SOSV fund program, so this is actually a bigger venture capital company, which I think has around about $1 billion under management, so not small. And they are located in China. And by the way, Miriam and I have been regular visitors to some of their startup teams and programs. I can really say that they're doing great work. And the managing partner mentioned on LinkedIn that in the last couple of years, they have been actually orienting more to Southeast Asia. But now that these new regulations are coming out, they are going back into China and investing in China. And what better signal do you want than those early investors? These are the ones who are investing in entrepreneurs and the companies before these companies are actually making their IPO. So these are really the persons who are understanding on the ground what's going on in China, what will be the benefits or also the troubles and issues with those regulations. And the fact that they are now saying we're going back to China, I think is a huge deal and a huge signal. And I see similar takes out there in my China network by professionals that are living and working in China who are, for instance, in the advertisement or e-commerce industry, saying that now that Alibaba and Tencent need to combine their services, or let's say offer the services of the competitor. So Alibaba customers can now start paying with Tencent's WeChat and the other way around as well. And so the walls between those big companies are coming down. They're not in this monopolistic position anymore. And the industry insiders are basically saying this is great news. It's great for our brands who are going into China, and it will create new innovation and new ways of actually being successful in this ecosystem. Some are actually going even so far and now pointing out that with the Facebook down problems and like how monopolistic Facebook and some of the bigger players in the West have gotten, that it could be a shift from China as the crackdown, the bad guy, to China to become the regulatory innovator there, and that some companies and policymakers in the US and Europe will actually be looking to what will be happening in China in regards to breaking down those monopolies and how this will affect the consumer, the user experience, but also the economics of the business models, and so on. And so these are mega topics, in my views, that are on the macroeconomical side that have huge impact on stocks like NIO, but also other Chinese stocks. And I believe in the next 6 to 18 months and beyond that, some of these could actually materialize. I'm betting that all of these will turn out the way that I just mentioned. It may go the other way. I don't want to talk down that there are significant issues and risks around investing in Chinese stocks right now. However, if you look at KWEB, for instance, it seems to be making a double bottom here, although it hasn't fully touched the baseline yet, but it seems like we have now tested those low levels twice, and we see some signs of recovery. And I think with more education and learning around those issues, investors will hopefully also get more confidence in China again. I'm actually seeing the first signs on the investor side emerge as well. Meituan just got a fine today, but what happened is that Meituan is up 2 to 4% intraday. For once, the fine has been lower than anticipated, but also the regulators were saying that these fines are not made to smash the business, but rather to strengthen the tech sector and also improving fair competition. So that's coming from the words of the regulators there, which I think right now it seems to instill confidence. And the way the stock has reacted, although there is a new fine today and new rules and stuff, shows me that lots of this bad news is already priced into the markets. Now, maybe even all of these things come together the way that I have just presented them, but there could, of course, be new black swans or negative events that may further depress Chinese stock prices. One could be around the issue with Taiwan, although it seems like the US Biden administration is now after this call with Xi Jinping, more on the side that they both want to adhere to the Taiwan Treaty and thereby have no confrontation. But from time to time, you will hear around military ships in the South China Sea and stuff like that. But this is just my personal view. As I see the Chinese having 5,000 years of history, and those recent issues with the US and Taiwan are just such a tiny blip in the whole history of this country. I don't see any immediate way how China would actually want to go into aggression there and taking Taiwan by storm and force. I think that's going to be a very unlikely event. Xi Jinping, in his speech for the 100-year anniversary of the Chinese Communist Party, only mentioned that in case that China is getting attacked, of course they will defend their rights, but I don't think that there is a big likelihood. But unfortunately, as investors, these are things that we need to have on our agenda in terms of possible conflicts, also around US and China in general. But here also some confidence, in my point of view, is the BlackRock integration into the US economy and the US administration on the politics side. So former BlackRock executives are now some of the consultants and even administrational forces of the US administration. And the fact that BlackRock is now planning a new ETF specifically investing in China tech shows me that if they have those good relations and know what's going on inside the US administration, why would they make such plans? Why would they start such a kind of ARK Invest-like ETF specifically tailored to China if they would fear that the China-US relations are getting out of hand? I think it's rather unlikely, but anything can happen, of course. What I think is the most realistic downside in the next couple of months for China actually could be slower growth. We now have issues around the energy crisis, which in my views is mostly on the supply side, issues caused by the pandemic as well. And possibly the regulations as well as the Evergrande issue could have some short-term effects on the Chinese economy in terms of the GDP growth numbers. But I wouldn't say that lower numbers here are possibly an issue, because those companies that I'm personally investing in are usually tech companies which are not necessarily related to what's going on the GDP side, which is still largely driven in China by the housing sectors. So if the growth is certainly lower than the 6%, that would still be okay as long as the Chinese consumer is doing well and as long as the Chinese companies are innovating. And I still think that will be the case. So there might be some negative numbers around this, but I'm not entirely sure whether or not this will actually cause another sell-off in the markets. It would rather make it more likely that the Chinese regulators and government is actually also going out there and stimulating the markets. By the way, these are also the views of BlackRock, and that would mean that there can be some kind of an easing policy on the fiscal monetary side in China as well, and that would be bullish for the economy in the end. And by the way, China has much more room with that, whereas the West is already maxed out. We have zero interest rates, and the ECB as well as the US Fed has been buying assets all over the place. In China, that isn't maxed out yet, so they have much more ways of actually stimulating the economy. And maybe that will not be even necessary if some of the topics that I talked about are actually materializing, like lower tariffs, like for instance the opening up of the economy finally, China opening their borders again with everyone vaccinated and so on. So I would say from here on, these are some really positive signs emerging. That's what I've been mostly gathering, collecting during this week and trying to give you in this really compressed format before I'm actually going deeper into some of these topics in my next videos. So I hope you enjoyed watching that one. Let me know what you think about all of these aspects down in the comments, and then see you in the next one.